Okay. You can see, ladies and gentlemen, from the chairs that we've put on the stage that we're in for a panel discussion now. And I think you're really going to want to hang around for the next hour. And there is a reward at the end of the next hour because we all get lunch at the end of it. But the next hour is actually going to bring and drill down a little bit in some of the issues that have already been aired this morning, because we have two panels looking at the way this industry works today and where the balance of power and interest and advantage lies between those people who invest in the hotel business, actually front up the money at the beginning, they come up with the investment capital, they build the hotels, the bricks and mortar, and then those people who operate those hotels, manage them and operate them, put their brand and their logo all over the hotels. In that relationship, which one hopes is a positive one, I know from just talking to a few people over the last 24 hours, there are rumbles of discontent and frustration. So that's what we're going to dig into over the next hour or so. So what I'm going to do is ask all of my first panel to come up. Now, these guys represent the investors, the money men, the people who are actually putting their livelihoods into the investment in bricks and mortar. So I'm going to ask all four to come up, and don't applaud each one, it'll take too long. So let's just get them all on stage, and then let's give them all a hearty round of applause. So could I have on stage Jalil Mekouar, who is the CEO for hotels at the Majid Futtaim-Properties group, Kees Hartzuiker, who is CEO of Ròya International, which is based in Dubai. Could I have Yannis Anagnostakis, who is the CEO of AHIC Hospitality Holdings, and Alain Debare, who is CEO of Action Hotels. Please give all four of my panel a very warm welcome. So, gentlemen, I want to play a little game with you. I want to imagine that I am your therapist. I know it's a little hard, and I'm probably not the guy you'd turn to for serious therapy, but anyway, let's imagine. I'm your therapist, and I lie you on my couch, and I say to you all, gentlemen, I can feel you've got problems. I can feel there's pain in your life, and I suspect it's something to do with the way the hotel's business is working today. And I suspect you feel it's not fair. Tell me why it's not fair. So here I am. I'm your therapist. Jalil, you go first.
Wow.
Tell me what your problems are. Tell us first of all what you know. Give us. Some won't know. Give us a sense very quickly of what your business is, and then what your problems are.
So I work for Majid Al Futtaim, and we own a portfolio of hotels in the region, from luxury all the way to budget. And I'm struggling with the fact that with all the investment on the hardware, that sometimes the software bugs, and we end up trying to fix the software, whereas we should be focusing on the hardware. So the software provider, needs to come up with the solutions. And
you're using software. You're using in a very broad sense.
Yes.
What do you mean by software provider?
Well, we build the bricks and mortar.
Yeah.
And we expect people or operators and our partners with whom we have fantastic relationships, by the way, to operate and bringing that added value and bring their software, right? Their intellect and their platform and what they know and their know-how. And I'm struggling with the differentiation, with the number of different brands that are out there. And altogether, I feel that sometimes the software in itself needs to be, when is version 2.0 coming up, or 3.0, or 5.0? I feel that sometimes it needs a little bit of an upgrade or an update. You get your updates on your iPhone every other day. So I feel that there is a little bit of an update that is missing somehow.
You think that the way hotel operators operate is outdated, that they're not keeping up with what's needed in a 21st century environment?
I wouldn't say outdated. I would say that, if you're outpaced by someone, means you can become outdated. I'm not saying they are, But when we've seen, obviously, the rise of the OTAs of this world and the Airbnbs and so on and so forth, then, the hospitality industry has, I don't know if we, as hospitality in general, and the brands and operators in particular, have done what we had to do. Have we not been a little complacent somewhere along the way? And let that happen as opposed to lead the change? We've basically been sort of overwhelmed by the change.
Yeah, I get the sense that, it's an interesting word you use, complacency. I get the sense that, times have been good in the Middle East, let's say, until about 3 years ago. And then times seem to have gotten a little bit tougher. And there's much more pressure on the bottom line. And as the pressure has risen, the frustrations of owners have risen too. Is that right, Kees? And from your perspective, it's a balanced relationship between owners and operators. Do you think the balance is in the right place at the moment?
Well, look, it all starts at the beginning. So I think on both sides, there has to be more visibility on the actual investment, the expectations, etc., because then somewhere down the line, it all goes wrong. So I think right from the beginning, the investment parameters should be clear to both the operator, not just the investor. And I think as the investors, we can maybe be a bit more transparent in that once in a while as well. But definitely the operators, they seem to have very little connection to the level of investment that is being made. And then somewhere down the line, it really hurts. So some examples of that would be, at a fairly early stage, a 10-year projection is given, and everyone understands hotels are not built overnight. The market changes, but that's your first level of understanding, because it's about a relationship in the end. That later on, when it gets brought up, there is no connectivity to that anymore. Plus, the people involved in the management companies at that stage are not even aware of it half the time. So tech services come in, make lots of comments that will have an influence on the level of investment. They need to be more educated and see it more from an investment side. Because at the end of the day, if we ended up with a product that is, we've spent too much money on for its potential return, we're going to have a problem, good times or bad times, or particularly in the bad times, of course.
Are you looking at where the business is in the Middle East today, and we've seen all these projections, and people are saying, oh my God, the growth projections are amazing, and I think Jonathan said, it's historic, we've never seen anything like it before. Are you worried that, the brands want to build their portfolios, they're keen to sort of work with owners, but are the owners beginning to think, you know what, this isn't working anymore for us?
Well, they can't open new hotels unless the developers continue to develop. Right?
That's right.
So in that sense, we're both equally guilty, if you like. But as I said, and maybe to pick up on the earlier point, so hotels are taken several years to build. The market will have undoubtedly changed from the way you've planned it. So it's about agility and how you then react to it. And I think that's another frustration of mine, is that it tends to be owner-led to drive the changes on the ground rather than by the hotel management companies themselves, because they have a lot of other balls they're juggling, but we only care about our ball, of course.
Okay. Now, look, because I'm an outsider, and that leaves me free to ask very crude, broad, tough questions, because I don't have any stake in the game myself, but you guys all have a stake in the game. So I'm just going to require you, as I'm your therapist, to be very open and honest with me. Right now, do you think you're being ripped off by the operators, Yannis?
That would be a very strong statement.
Hey, I'm your therapist. It's all confidential. Nobody's listening. It's just you and me. So
I'll pick on what Kees said. We are jointly responsible. We're jointly responsible for our industry. We're jointly responsible for the sector. Some owners, as pressure and demands and deteriorating performance, may be feeling ripped off, and that should be understandable.
Are they? I mean, never mind all this polite, some owners might feel. Are there cases in your business? And
indeed.
Yes, there are.
Yes.
How does the rip-off work?
Let me give you an example. At the onset, an owner expresses aspirations, decides to develop a property that is positioned, let's say, 5-star. An operator steps in, competes fiercely to take the flag of the hotel.
Yeah.
But in the process pitches a 4-star flag because they have geographical restriction from the 5-star brand in the portfolio or whatever other reason.
Right.
Fast forward, the hotel opens.
Yeah, but you don't have to take that deal. You can go
You
with
took it. You made a mistake.
Well, that's your fault.
Yes. You
Well,
made
it's
a
no
mistake.
good blaming somebody else for your stupidity.
No, let me just rephrase that. There is a representation that the hotel will perform according to your expectations, according to your own.
Yeah, but you know
investment
that.
case.
Yeah, but you know you're both culpable because they're selling you a pup and you're taking the pup, knowing that it's a pup, but sort of pretending it's a
All right,
full-grown
let me
dog.
take it then to the next level. What matters the most? The customer. What if the operator delivers a 3-star paying customer? Are you in trouble then, or?
I'd say so, and that's happening. Has it happened to you?
It has happened, yes.
Where?
Multiple parts of the world. In the US,
Right.
in Dubai.
In Dubai.
Yes. Occasionally,
Care to
Russell
elaborate
Game as well.
further? A hotel that I need to avoid because
I wouldn't like to name and shame. It has happened. And
Right.
owners and operators should be equally prepared to assume the responsibilities. It is not one side or the other.
Right.
Jointly, you must address the problem.
You know, that's a very interesting point. Alain, somebody in this room had a chat with me earlier and said, you know, one of the problems is the operators don't have enough of a stake in the game. You know, it would actually change things radically if operators would actually take a small stake in ownership in these projects and hotels, because that would change their mentality. Do you think that is the way forward?
Yeah, I think, you know, when you look at the market, especially in the Middle East, all of the hotel operators just manage hotels. They actually don't have any investment. So they have an investment at their support levels in through their regional offices or their systems, but they don't actually own.
There's no
the
skin. They don't have much skin in any particular project or hotel, do
Exactly. And the best that they're willing to do at the moment is, you know, put owners' priorities, saying, you know, below that level of income, we're going to stand aside on our incentive fee. So their worst punishment could be that they make less money on their fees. But, you know, for us, as owners, we have, and we know how it feels to pay the interest at the end of the month, which is a tremendous pressure on the owners, which we don't feel at times is flowing through properly through the properties. As a result, we have to get involved quite a lot on hotel operations, and that's what the asset managers do. And you know, we work collaboratively with all our operators to make sure that they fix the issues. But if we don't raise the issues are not being raised at the same time. And I think the issue, why they're not fixing the issues before we raise them, is because they're very busy. They're busy developing and adding more and more hotels.
They're too busy thinking of new fancy names for their new brands and, you know, the logos and the marketing campaigns, you know.
I mean, some of these...
And you would argue you're paying for all of that, in a sense.
Sure.
Well, it's a rubbish relationship, isn't it?
Sounds like it. Look, like I said, I think we need two things from the brands. One is revenue, and the other one is to help build a smart real estate investment. I've given up my expectations on the operational kind of items that you've mentioned. I want them just bring me the top line and make me spend the right money.
But if you've given up on so much of what one might have thought was part of their responsibility, why do you need these brands at all? You know, it's no good
For the
sort
top
of...
line.
What?
For the top line.
Yeah, but the business is changing so fast with your online travel agencies and your social, you know, what the internet can provide. Maybe these huge global operator brands aren't as necessary as they used to be.
And
Definitely.
I think.
Go on.
I think the challenge is the hospitality as a whole, but the brands in particular. They have been hit by disruptors that have completely shaken the business model, right? We know that, talk about it, OTAs, etc. Their response to that, or at least that's how it could be seen from outside, is we got to get bigger. Now that we let the other ones get bigger, by the way, they didn't come from the hospitality world, which we should own. We own customer experience, we own hospitality, but somebody else from the tech world came in and, you know, had a big piece of my pizza, right? And now all of a sudden it's the whole pizzeria, right? Or 80% of it. And so what's the response to that? Now that they got bigger, too big to fail, right? We got to get bigger than them or as big as them. You know, they spend billions of dollars in marketing. Oh, we should get bigger. So what happens? We consolidate. This big guy buys this big guy, and then
It's happening all the time, yeah.
happening all the time. Oh, second thing what we should do is actually have more brands. So then we can have more hotels. So now all of a sudden we have Hotel A or brand A here. I can't have another brand A next door because of restrictions. So let me have a brand A++ or B- or something, and I put it next door. The argument to that from the operators is, if it's not me, it's somebody else. Yeah, I'm not sure that's a very strong argument. So the point is, I think, it's my maybe simplistic analysis, is trying to get as big or get closer to the big guys so then I can do something about it. But are we doing something about it? That's the question. It's a genuine question.
Well,
I'm not being cynical. I'm really asking, what are we doing, or we as the brands, what are the brands doing to gain back control of the brand advantage, of the very reason why we choose these brands? Customer experience, differentiation, being able to drive not only the right talents, but also the customers that we want. Are we doing that, or is somebody else doing, do we need somebody else to do that for us?
I mean, as you guys are talking, I'm just trying to figure out where the real leverage lies in this complicated relationship in the hotels industry, you know, from the investor, the developer, the operator, the franchise holder. Where it's all a power dynamic. Where is the power at the moment?
Where is the power?
Yeah.
On the consumer.
Who really, on the consumer, I guess.
Very well done.
Okay, yeah.
Straightforward.
Are you scared of the consumer?
Not at all. Not at all. And both parties should be paying far more attention to the consumer, in addition to our shareholders. And that's the common denominator. We have shareholders to serve. But more importantly, it's the customer who decides our success or failure.
Do you think in this region there is a grave danger of running too far, too fast right now, and then ending up with a sort of oversupply situation?
Potentially this could happen, and none of us can prevent it from happening. It's an open market. An open market functions like this.
You're not, obviously none of you speak for the collective, you speak for your own business. But for your own business, you can rein yourself in, you can decide that actually the climate isn't quite as great as I thought it was. I've got all of these brands tempting me to build another hotel, telling me that they'll back me and that they want to work with me. But right now I'm feeling cautious. Are you feeling more cautious now than you were maybe 2 or 3 years ago?
I only represent investors. I'm not an investor myself. And I think a lot of the supply is actually coming from government or semi-government developers. So from a private developer's point of view, I think the activity has slowed down, other than, of course, as we all know, everyone is shifting their focus into the 3- and 4-star segment, because, as we know, traditionally this part of the world has been very 5-star led.
Yeah. Anybody else on that perspective of where, you know, whether you're feeling super confident or a little bit cautious, and whether you're changing the kinds of hotels you're building?
I mean, in our case, today we've got 14 hotels with 3 hotel operators in 7 countries. And we're a public company, so obviously we have to put out forecasts to the market. And we've been more than disappointed with the ability of the operators to actually stick and deliver the budgets. So the actual variance that you're able to put out to the markets between the forecasts that you put out to your investors and the actual realization is a huge gap, which puts then the investors in a very difficult situation.
So be very clear with me. What this huge gap, explain it to me.
I mean, it's created ultimately by the top line, right? Because I think the whole challenge today is the top line, is the new rooms coming in the industry. In our case, we focused on economy mid-market hotels. We had probably thought that the sector would be more resilient than it is being sold or openly talked about. You know, our margins, I mean, if you go into the airline sector, you know, you don't see an EasyJet discounting their bedroom 40%. Today, in the economy sector of the hospitality industry, you know, you can have a 40% discount on an Ibis or on a Novotel or a Sofitel room. Sofitel is the upper end, but there are a high level of discounts, which are eroding our margins, but which are caused by the new.
But the customer is king. The customer's loving it. I'm loving it. I don't want that to end. I want a 40% discount. That's fantastic. Thank you very much.
I think they're really throwing up, it's the supply and demand equation, right? But and there's also new entrants in the markets that need to make the space in the market. For example, we've got Holiday Inn in Muscat doing really well.
Yeah.
And we've got the Rotana that's open next door. And the Rotana to kind of make their space in the market, it's got no other alternative than to slash the rates.
But,
ultimately, they're damaging the market for everybody.
But
And the investment proposal is not as good as it used to be for the investor.
Okay. Well, I can't decide whether I'm feeling sorry for you lot. I don't think I am, but you're trying to make me. What did you want to say, Jalil?
No, I just wanted to mention that it really depends how much you zoom out, right? The interesting graph earlier that was presented by STR was compelling. Of course, if you zoom in 2008, 2009, you're going to go and commit suicide, right? If you zoom out and zoom out and zoom out, and then plot in the evolution of other cities, right? We say that by 2020 or whenever we'll have more rooms than in New York. Well, let's put New York out there. I think somebody else said, I think Mr. Labar said that we have enjoyed in this part of the world the bonanza of growth. At one point, we need to stabilize. So I'm actually very positive on the long run. If you look at short and medium term, of course, some people are going to get hurt. Of course, there is, we can't deny it. It's on the graph right there. So there is more supply coming in. We can't deny the pressure that the supply puts on the market. But I think when you zoom out and you look at the region, or even just Dubai or Ras Al Khaimah also, you look at, you zoom out and you compare it to other destinations, it'll come to a point where it'll stabilize, it creates momentum, it creates the right base. So if you're a long-term holder, like we are at Majid Al Futtaim, it's going to be weathering a bit of a storm, maybe a bigger or smaller storm than others. But at one point, it's going to stabilize and start to peak again until there's another cycle. So it really depends if you zoom in or zoom out and what's your position as an investor. You're a short-term holder, long-term holder.
But I understand cycles. You don't want it to be boom and bust, though, because in the bust period, you're running the risk of being one of the bust people.
Sure.
We're nearly out of time, but I'm very mindful that you're keeping these chairs warm for the individuals who are following you, who all represent some of the very, very big brands, the big operator names. If you had a moment just to send a message to them, what would it be? Be as rude as you like.
Sure. Well, being Dutch, that's normally
Yeah, no, that becomes second nature to you,
Yeah,
obviously.
absolutely.
Yeah.
So I think we've fallen now in the trap of this discussion slightly as well to talk about the pipeline, just like the hotel companies always do. What about the business here and now? We are in a downward cycle in many trading environments.
Well, how come we see all these graphs?
No. That's when you put all of the hotels together and all of that. You have to look at the existing hotels in a city like Dubai. There's now a third year. You said it yourself at the introduction. We're at a 2-year plus cycle already of up to 12 to 20% decline in RevPAR. Food and beverage, it's ugly out there. We're losing lots of revenue. I see nothing from the operators, what they're truly doing about this. This is not a 2-3 months dip.
Yeah.
This is already several years like that. And actually they're running away from it because what has happened in food and beverage, we're leasing it out to third-party operators. It's not the priority for the hotel operator anymore. Right. Secondly, if you have a RevPAR decline, you just said 40% you can't discount, but we've just agreed the customer has the choice, he will do it.
Exactly.
So re-engineer your cost base because that's the new reality. And then when times goes better, you can maybe do some other things. But it is the asset managers, it's the ownerships who are always pushing the operators for come with a solution. And they don't. So please, as my therapist, if you could take that point forward, I would appreciate it.
You know what, Kees, you speak so clearly, I don't think you need a therapist. I think they just heard you.
Bring them on.
I think that was called a squeal of pain, and I think they just heard it. Okay, anybody else want to have a go before we change chairs?
Well, sure. I think, when you look at the performance, the occupancy is there. Average occupancy across the portfolio book, high 70s. But again, I think the focus should be on preserving the markets and the rates. And how do we achieve that?
Yeah, but everybody wants everybody else to take the pain. You owners, you want the operators to take the pain. The operators will say, well, no, actually...
Management agreements.
I'm sorry?
We have to change the management agreements.
Ah, Yeah, but hang on. I mean, there's such a
we
thing
don't
as
have
legal
time for that.
contracts. You know, you can't.
Yeah, and
You
you know
can't,
the
you
next
can't
problem.
sign a deal and then say, you know what?
And luckily the
Nobody
contract
makes you sign a contract.
Yeah.
Nobody has a gun. Well, I don't know. Sometimes,
and
but I imagine you don't have a gun to your head, and they say, "Kees, you either sign this deal or you're dead."
but-
You choose to
No,
sign
no,
it.
that's with new contracts, that's fair comment. But most of us are dealing with legacy because these contracts insanely are being signed for 20 years plus 10-year, one-sided. If the operator likes to stay, he stays. So obviously in new contracts, we don't fall in that trap, but we're living with existing contracts.
Colony era, you know, we get colonized eventually. But one point, we've lifted the capital intensity of doing business for the operators.
That's slightly, for an ignorant person, that's slightly jargony. Can you speak in, what does that mean
so
exactly?
we're
in the
20
game.
years into the asset light or asset right era for the operators, where operators chose to focus on their brands, operating their properties, growing their system, rewarding their customers, and all these beautiful things.
Yeah.
Simultaneously awarding dividends and special dividends to their shareholders.
Yes.
We would like a chance to do that too.
Yes.
So what I would recommend, what I would put on the table is take some of that capital that has been spared.
Yeah.
Find your purpose, the purpose of each and every one of your brands. Take brave decisions. If your brands no longer serve a purpose, fulfill a real customer need, or are able to compete in a specific market space, do without them.
Right.
Create something new.
Junk a few
Start
brands.
something new.
Yeah, okay. We're almost out of Go on then. I'm going to give you the last word, Jalil, because then we've got to stop.
No, I would just say that if I had something to ask, and I see a few operators around the room.
Well, they're all
I'm
quaking in
going
their
to
boots.
avoid eye contact from now on, but is help us help you regain control of customer acquisition, and so we can help you to improve customer retention. Because I think there's been a little bit of loss of control along the way.
Yeah.
And we as owners, at least on our side, would be more than happy to help regain control of that customer acquisition process, and also retention, and get those customers to come back. It takes two to tango, and we can't keep on complaining and the other ones keep on being defensive, and vice versa, or us being offensive, and all that game.
It's not going to be much of a tango if you don't trust each other.
That is true.
Yeah.
But
All right.
a lot of stepping on toes.
Indeed. Painful for everybody. All right. What a great panel. Thank you very much. Now, look, ladies and gentlemen, I'm not going to name them all again because it just takes too long, but please give my investor panel a very warm round of applause. Thank you very much, gentlemen. Can I invite you to depart? Thank you very much indeed. Great job. Thanks, gentlemen. Thank you very much. Okay.